So here's the interesting thing. The PTs are paying 17.21%. And again, this has zero intrinsic yield. So the 1.6x Ethereal points, which I think is going to be for the token of the DEX, plus the points of, if he's in season 3, 4, whatever, season 3, right? Mm-hmm. Those combined, it's saying has an implied yield of 17.21%. Zero intrinsic yield. So to me, that's pretty bullish on the Ethereal DEX. That's how I'm interpreting this. Welcome to today's podcast episode of the Dojo Pod. Pain. I think max pain is what we're experiencing, but I've also seen a lot of posts on X saying like they've reached a level of, it's not catharsis, it's like catatonia. Basically, people no longer feel pain in the dips. Now, as someone who is slightly leveraged long, I will say I am certainly feeling pain, and it is less than enthusiastic, but we've seen this before. ETH Denver tends to be a bearish event for ETH. I don't know. How are you holding up?
I'm someone who likes to make that joke of being in DeFi for so long that all of my pain receptors are dried up and dead. But for some reason, waking up this morning and seeing Bitcoin below 90K really struggle busing, and alts already got carried out, but now they're quadruple carried out. It's painful, man. I don't think we should fade it. It's been a brutal couple of weeks. We've been kind of back to back with just disaster after disaster after disaster. The latest, of course, being, I think this happened after last week's show, but of course, Bybit got exploited for $1.5 billion due to basically the safe wallet that they use. They were tricked into signing, malicious transactions that instead of sending money from one cold wallet to another, sent money to North Korea. So it's pretty much been established now that it's North Korea and its Lazarus group that's done this. And they basically stole $1.5 billion of ETH.
Well, luckily, as ETH goes down, the exploit was smaller.
That's true. It is the biggest exploit of all time.
Biggest exploit so far.
That's true. It's pretty amazingly the biggest here. Let me see. There's this leaderboard, the famous wrecked leaderboard, and I'm just sending it to you right now. Yeah. Okay. So it's kind of interesting to go back in time and think about how big those exploits felt. So number one, obviously Bybit 1.4 billion. The Ronin bridge hack, if you remember that one from a yesteryear, that was 2022, $600 million. Poly Network, 611. The BNB bridge exploit, I think that one was also maybe Lazarus. I can't quite remember. That was 500 million. SBF mask off, 477. Wormhole, I remember Wormhole feeling like that was going to be the end of Solana. That was only 326 million. So it does put things into perspective a little bit. But it's the same kind of exploit as what happened to number 8 there. So the Wazir X exploit and Radiant is basically the same mechanism where it seems like Lazarus Groups has an ability to infiltrate people's devices, right, push this transaction, that looks like they're sending it to one thing when they're in fact sending it somewhere else, and then just running off with the money. And the sad thing is that a few things. One, this is the Lazarus Group, so recovery is very unlikely. Two, it's funding, North Korea's nuclear program, and that's, and all the terrible things that go on over there. So, it's pretty bad.
Why does it to feed the people?
Yeah, I don't think so. But anyway, on the bright side, Bybit seems to have come across this very well. Their communication that they did in this major crisis situation has been fantastic. They brought a lot of confidence into people. I know there was a lot of withdrawals that came out of the SEC.
I don't know. It was some ridiculous amount of capital that came out.
I don't know if it was 70%. It was a lot, but they managed to handle it, right? They handled it. They handled withdrawals. They handled communication. They, I guess as best as you can say, they did crisis management very well. Here, this is the SEC transparency list from DeFi Llama. Oh wow, DeFi Llama is currently offline due to a Cloudflare issue. So
it's online.
It's online for you. Okay. So yeah, you can see Bybit has had, they're at 11. I think when this whole exploit started, they had $17 billion of assets on the platform. Now it's at 11. So they've had quite a bit of outflows. But again, they've handled it really well. Also, a lot of these on-chain mechanics have handled it really well. There was a bunch of wrap staked ETH that got exploited. There was a bunch of meth that had been stolen. Meth being
the Infini Earn product, which apparently like has had TradFi implications, or at least people were using Infini accounts with like cards. So people's like funds they were using for their daily lives were lost, which is kind of terrible. It's like, you know, one of these Earn product type things we saw during like the Celsius days, I think.
Was that connected to Bybit at all, or is that?
No, completely.
Oh, okay.
Exploit, as far as I understand. But I'm saying,
Oh, okay.
Just dominoes of things all falling sort of in quick succession.
Oh, well, what I was talking about was, you know, the part of the money that was exploited was wrap staked ETH from Lido, and part of the money that was exploited was meth, which is like the Mantle liquid staking protocol like token. So they did depeg a bit. They like sold it all into ETH, but you can see here 8,000 meth were swapped for ETH in 3 transactions. But, you know, they were able to like get back to peg very quickly. They were able to recover funds that were not swapped. So, you know, not only did Bybit handle this very well, but also, you know, again and again, we see that like on-chain protocols are very resilient when it comes to these things. So I guess that's a bit of silver lining. You know, on the other side, like it seems like Bybit already has bought back something like $400 or $500 million of ETH. So that's great. Of course, it happened, you know, ETH started pumping, and ETH pumping has this been specter of on the market where like as soon as people see it, it's a joke that like bad things are going to happen. And literally so far it has. Like the last time ETH pumped, Bybit got exploited. And then because Bybit got exploited and they were buying back ETH pumped, and then the whole market just dropped like 10 to whatever percent, right? So it's been amazing, amazingly consistent.
I said we're in danger when ETH was pumping against the market.
Yeah. I mean, it's a funny joke, but it is also at this point like so real. It's kind of insane.
Yes. Yeah. Well, I mean, so there was that. There's also, I mean, TradFi also had their worst day of the year so far. Around the same time, then, you know, Trump re-announced new dates for the Mexico and Canada tariffs. I think it's like March 4th or something to that nature. I don't know too much about macro. I just know that like stocks have been down, crypto's been down. Crypto's been hit by a series of exploits, including the Infini Earn one, including the Bybit one. There was another one that I can't think of right now. Oh yeah, OKX also apparently got hit by some lawsuits, I think. I don't know how much.
They just settled. I think that was a relatively bullish one. They settled. It seems like, so Robinhood had been sued by the SEC, Coinbase had been sued, and those were just like settled out of hand. Like they're not just going to continue on with like the case essentially. OKX, they did have to pay something, but like it was like
millions of dollars.
I thought it was like 85 million. That's like nothing. $85 million is like for OKX, which is like a top, you know, sex. Like that's literally nothing for them. That's like, you know, probably a month's worth of revenue or something like, or less maybe. So
yeah. Well, that's good. All right. Yeah. So, you know, let's get bulled up again. Let's get super excited. On the bright side, so leading up to this sort of series of unfortunate events was the launch of Berachain and its associated DeFi ecosystem. The launch of Sonic had already been launched, but Sonic came out of nowhere, and then everything in the Sonic ecosystem started pumping. Andre Cronje West, if you want to call him that, he came back into the sort of zeitgeist and just started. Shilling is the wrong word, but he started like just bull posting every single thing he could find from Sonic. He retweeted a few of my things, which was kind of fun. And Sonic price went like, you know, I hate to use the word parabolic, but I think if you look at the chart, you would say mathematically it was a parabolic shape. It went up a lot, substantially, you know, like 2x in the past few weeks. Of course, it's come down since because everything is super down in like the dumps, but some interesting protocols had emerged from Sonic's hype, I think. I think Shadow is one of them. I would say Shadow is one of the most interesting protocols. And it's not like novel at its core, but I think the one cool thing they added was this X Sonic mechanism, which feels a little bit like Ponzinomics, which, you know, phantom vibes for sure, but it's fascinating. So if we go over to, so you've seen Shadow before, right?
Yes. Yeah, but explain it to me. I'm a little bit less in depth on it than you are.
Well, my understanding is that Shadow is a solidly typed DEX. So, you know, it's concentrated liquidity, but you'll be getting X Shadow as your rewards. And then X Shadow stakers, voters will get the yield, the underlying yield of these pools. Now, the fee fees are really low. So they're going to be routing a lot of volume, but they're not going to be producing a lot of fees. It's one of the things that, you know, might raise an eyebrow about. Also, a lot of these APRs are semi-misleading because they tend to advertise in single tick. So like, yeah, maybe you'll get 26%, but you're not going to be in range for very long. So that is one caveat that I would like to point out. But even so, the X Shadow token has gone up dramatically, and they have this really gamified system, I think, where they have this outstanding pending rebase, and it's distributed weekly, I believe, to X stakers. So like, there's $4.2 million. They'll be distributed to X. I don't know how many X stakers there are, but here we go. Rebase APR. So the rebase APR is 122%. That's kind of cool. That's kind of neat. I don't necessarily know where these fees are coming from. I don't know if maybe like, because I would think you have to have the X Shadow to vote. But anyways, it's a neat mechanism. X Shadow's been doing really well. It's been, I guess, one of the most competitive DEXs on there, and it certainly made me go check it out. Now,
well, if it's probably coming from the emissions, right? I mean, if it's solidly forked and there's high emissions that come, and it's probably, if it's a rebase, it's probably the assets that are going to be.
Oh, no. I think the way it works is someone was talking about this in the Discord. You can redeem your X Shadow, I think.
Oh, right. Yep.
And right, redeem here. And when you redeem there's somewhere where you can redeem your X Shadow. When you redeem your X Shadow, like some percent of that, instead of getting burnt, like a lot of traditional mechanisms with these, it just goes straight to the rebase.
Right. Yeah. So either like if you're farming this, you can claim and like give up some portion of it, like get a discounted amount of the token, but whatever you're not taking then goes to people that are fully locked up. The claim part, if you go further up and you hover over X Shadow, it's right there.
Oh,
yeah.
Where?
Yeah.
I don't see X Shadow.
In the middle. Yeah.
Enter exit stake.
Yeah. So you can just burn. I think can you just burn it through that, or maybe it's selling it. Yeah. I don't know. Anyway, I'm pretty sure that's how it works.
Enter exit. There we go. It's enter exit. Yeah. Instant exit. So 50% goes to the whatever the thing we just looked at. So it's neat. I will say it's not like the most like we'll go on forever in perpetuity. We'll become a new mainstay of DeFi. Will be like the best thing ever. But if you're looking for something fun to do while everything feels incredibly insanely painful, this at least has some level of novelty to it. Feels kind of like DeFi summer. And before the markets decided to go absolutely straight downwards, this was kind of a fun place to hang out. So there's this, but let's look at some, I guess, more bluer chip things, greener pastures, like, of course, Pendle. I mentioned in a recent tweet that Pendle brought on 2 new markets with assets that I had never heard of before. Now, one of these you're actually familiar with, but let's talk about Ethereal USDE first, because this was something that I didn't know about, and I'm sure there's things that you can tell me that I still am working on. Ethereal, here's where you need to correct me where I'm wrong. Ethereal is a DEX, a perp and spot DEX built on top of the Athena network, and so Athena network apparently is going to have its own chain. That's how I understand that. Ethereal is going to be the perp spot DEX of that. Now, the benefit of that existing is that they will be able to like short on their own platform, which is sort of this flywheel for them. Well, they will benefit from their own sort of delta neutral hedging. Maybe there's some additional benefit they could have by being lead market makers on their own platform. I don't know. It's neat. And so when you are participating in EUSDE, there's a few things to know. One, it is not yield bearing. So it's not staked. It's not going up in value. It's USDE pre-deposited into the Ethereal campaign. And so you're getting 2 things. You're getting sats. Sats, if you guys just entered a DeFi and don't know what a sat is, it is Athena's points system. So they have a season 3, and this season 3 has a SAT campaign. You get sats, you get a larger portion of the airdrop. That everyone is sort of familiar with. But there's no vesting or locking for people who get their sats using EUSDE. That's a pretty big deal. Now, before we go on to the Ethereal points, Mara, we both know quite a few LPs, whales, family offices who have been, I don't know what the word for it is, affected by the vesting of previous campaigns for Athena. Can you tell me how big of a deal this could be for them?
Yeah, I mean, it's massive, right? Like, I think that there's people that are still, definitely still claiming from season 2. There might even be people that are claiming from season 1. Maybe that's not true. But yeah, I mean, having the ability to kind of claim day 1 and go and decide whatever you want to do with it. So I don't know, for example, with ENA, some people go and stake it and get the yield and are very excited about that. Some people just go and sell it, do whatever they want. But yeah, there have been, for many of these airdrops, whether it be Renzo or Athena or EtherFi, they have been hit with these vesting. I think most people's solutions has just been break up their assets into different wallets and not get hit by this as much. But,
simple.
You know,
always simple.
But, you know, having this market, and also I'm pretty sure that the Berachain version of this as well did not have vesting, is great as well. So I'm glad that Athena is doing that. In terms of this whole system of like Ethereal, you know, it's gonna be interesting to see how much traction the Athena L1 can get. You know, like they do have obviously $462 million already deposited into that. So there will be a lot of TVL. I'm just like a little bit confused. Like, is the chain going to be running off of their, you know, ENA token? Is there going to be a new token? That's like one layer of questions I have, which I haven't been able to answer yet, because if it's a new token, it seems kind of bearish for the old one. And if it's not, it also seems a little bit like dilutive. They're already on season 3. Is season 4 going to have like another large amount of airdrop? You know, like that's the problem with these points.
It's protocol, right? So if Ethereal is going to be a protocol, I can imagine.
Yeah, but the chain has to have a token too, right? How are they going to attract money to the chain?
Imagine.
Right. That's what I mean. How are they going to attract money to the chain without either one, having a new token, or two, having a season 4, which is, you know, like at a certain point, there's so many seasons that like, you know, it just becomes kind of dilutive. So that's one thing. And then in terms of the DEX, like I think it's cool. I think it's interesting. Like we've seen a ton of large LPs who were very interested in using Bybit, for example, where you could use USDE as collateral and get paid like 10%, sometimes even 20% on the margin for their, you know, their perp trading, which is great. If you're going like delta neutral, you're getting paid, you know, let's say 15% from USDE on Bybit, then you're getting paid, you know, whatever it is, the funding rate plus whatever your long side yield is. It made a lot of the delta neutral plays very interesting. And so I can see the TAM for what this, you know, Ethereal perp DEX is trying to do. If they can do something similar, it seems like it could be a pretty powerful unlock. You know, it's different than something like Hyperliquid where you're not getting paid for the margin that you're holding. So I think that's interesting. It does always just make me a little bit nervous because, like, you know, Athena inherently, the stablecoin, is basically just like a vault token that's representing a delta neutral position that's getting, you know, a funding rate paid to it. And then taking that vault token and then running the same strategy on top is just like building up of leverage in the system, you know. And like, I know people have been fudding Athena like with built up leverage and all these kind of things. I'm pretty sympathetic. I think that they've done a great job and they're one of like the standout products of the cycle. But when people build on top of them is when it makes me nervous. Like the Athena itself doesn't necessarily make me nervous, but seeing Ethereal where someone might be holding USDE, which is representing another position, and then running the same one on top, it feels a little bit, you know, a little scary to me. But anyway.
Yeah, I mean, I take that point. But when I think about like what are the risks of USDE, one, they have like $30 million reserve, or maybe it's even larger than that now, but pretty substantial. Or no, like they had a $30 million potential, I think, like unrealized P&L or something on Bybit, but their reserve was so large that like only 1/3 of the reserve could easily cover that. That was one of the nice sort of votes of confidence that Athena got during this craze, was that like they would be able to survive that if it happened. Luckily it didn't. Bybit's, all the withdrawals have gone through. The biggest risk is like if funding rates go negative, which for Bitcoin they typically don't. The twitchy eye from too much coffee and so much stress from this market. Typically funding rates don't go negative for Bitcoin, but if they did, then you could see like a negative carry cost. I do think probably they would like diversify into on-chain bonds or something else. They may have already done that. I keep forgetting to check or look or remember. But I take the point, because but that said, if the stablecoin depegs slightly, right, if USDE goes down a little bit, that's actually better for people who are leveraged long, because then they can close their position at a slight premium to what it would otherwise be worth, because they have to repurchase that stablecoin to exit. Granted, for shorts, the exact opposite is true. And I sort of take your point, if they're backing their own USDE by a USDE margined position, it may get wonky. I'm not too worried about it, because I think the backing of the principal USD is relatively fine, but I take the point. Now, USDE APR says it's at like 8.32. I have to imagine that's going to go down to like 6%. Now, today is the day, right, that we could check that. Now we can check it live, but if it is this high, one of the best strategies for USD, I know we're jumping all over the place, guys. It's been a crazy night. If it is 8.32, one of the best places to leverage that is Dolomite on Barachain, because as you mentioned in a few previous podcasts, they got $400 million of effectively locked deposits from Boyko. So you can borrow USDC, or you can borrow USDT, or you can even borrow USDA for like less than 2% against SUSDE at like 83% liquidation threshold. So, I'd probably do 80%, which gives you 5x leverage. And so the total yield there ends up being like 27%, which is really good on a stablecoin. Now, I think we'll find even better ones in this podcast, but I think it's interesting for sure. But let's check. I'll show you guys how we check the Athena yield. Well, I haven't checked in like a week. Okay, rewards tracker. We need to do the early distribution because it's early. No, wait, today's Tuesday, so I can't check.
Yeah, it's on Thursdays that they do it.
Yeah, you're right. I thought it was Thursday. I thought this was a community call, so we can't check. It probably is 8 point something, which means it is a good yield. So there you go. Now let's hop back over to Pendle.
What are the PTs paying for this Ethereal?
So here's the interesting thing: the PTs are paying 17.21%, and again, this has zero intrinsic yield. So the 1.6x Ethereal points, which I think is going to be for the token of the DEX, plus the points of, if he's in season 3, 4, whatever, season 3, right? Mm-hmm. Those combined, it's saying has an implied yield of 17.21%, zero intrinsic yield. So to me, that's pretty bullish on the Ethereal DEX. That's how I'm interpreting this.
Yeah, I've seen some other estimates on this that thought roughly it was about 12% coming from sats in the season 3 of Athena, and then roughly 5% coming from the Ethereal DEX. Who knows? It also, one thing I would just caution everyone who's playing with these things, especially if you're messing with YTs or anything related to that, is make sure you're looking at the multipliers. All of the different Athena markets have different multipliers, and so I think that vanilla one, for example, is like 50x multipliers or something. Yeah, 50x sats.
So this is not valuing the... Sorry, I take it back. This is not valuing the Ethereal points highly at all.
Like, I guess it's like 1% there. Yeah.
Yeah,
it's interesting. Yeah. Which is interesting. Like, if you go down and look at like the Barachain version of this, that's getting 30x.
USD or USD Barachain?
USDE. Yeah, there's just a vanilla one.
USD.
Yeah. That one's getting 30x, and that's 12%. So like that's basically.
And bear borrow.
So this one, if you do the math on it, it's basically valuing the Athena points exactly right compared to the other ones, but it's valuing the Barachain, the concrete, all of the rest of it at basically zero, which is fascinating. So it seems like the Athena points are like very robustly priced in on most of these markets where it's very consistent.
Else is like shot in the dark.
Everything else is a complete shot in the dark. Yeah.
Yeah.
It's fascinating.
So let's look at, I think it's Apostros. I think is the name of this thing. No, Apostros is asterisk. There we go. I'm just thinking about punctuation. You have apostros, like apostrophe, and then asterisk, which sounds like an asterisk. Okay, so here, asterisk, almost the exact same thing, kind of, in a way, but on Binance. So I think really tapping into the Asian market, in my opinion. Underlying asset, 40 million TVL. You can already see that one ASUSDF has accrued 1% intrinsic value so far, which is why it's worth 1.01119 USDF. Similar. So we'll go to the website, but this is the reason why it's kind of interesting, in my opinion, is that it's season 1, right? And season 1s tend to be better than season N, right? After 1 or N+1. So if we go over and check out the website, what you will notice is that they have a lot going on. Let's go to earn. And so USDF is sort of what we're looking at, but if you just look at all the assets they have, they're AS assets, AS USDF. So this one's pretty simple, right? It's backed by a same thing, basis trade, and it's getting season 1 points, and it's getting an AU multiplier of 10x, which are their point systems. On Pendle, you get 25 points. So 25x points, right? So if you're doing the YTs, if you're doing the LPs, you get the points. If you're doing the PTs, right, you're giving up those points. That's why you get a fixed rate yield of 19% roughly. But going back over here, we also see a few other things. We see ALP, which I've been trying to learn more about. It looks like one of their counterparty vaults for their perp DEX. Then we have ASBNB, which I think you know a little bit more about because this uses Listus as the underlying. Or Lista?
Oh, okay. Yeah, I didn't realize there was a connection with Lista here. Lista seems to be kind of blowing up recently in terms of like having a ton of different vaults and assets. They even had a Barachain thing, which I was like completely unaware of. Here, let me just send you a link. So they just are starting to list assets on Pendle, which is great.
Overwhelmed trying to manage your crypto and DeFi investments? Try iYield, a free financial planning tool for crypto natives and yield farmers. iYield reveals your full financial picture by also supporting debts, incomes, and expenses in both crypto and fiat. iYield supports a growing list of over 16,000 tokens in 40 of the top DeFi and staking protocols across 17 blockchains, including Ethereum L2s. The best part is that it is 100% free, anonymous, and there are no ads. Check out iYield.com to take control of your financial future today.
Also, they have some kind of like very interesting different primitives. So like this, for example, CLIS BNB is basically a liquid staked BNB token that is also, I think, I'm not sure if it's on here yet. They're like a lot of signaling that it will be on here soon, I think.
Oh yeah, it is. There it is.
Okay.
CLIS BNB.
Yeah. So basically this is liquid stake BNB that's also then restaked on the Binance Launchpad. So if any of you guys hear of like, you know, Barachain gave 2% of their supply to the Binance Launchpad, or I think like Scroll gave like 7% or something like that. That's some crazy numbers. Like, but basically,
and too, right? I mean, Kato gave some percent.
Yeah. So like every major protocol that wants to go and list on Binance has to give, it seems like, some portion of their total supply, often like 2% or more, to people who are staking BNB. And so, you know, a lot of people are doing that. Now we have a liquid representation of it, which Steven loves because he likes to have DeFi Lego blocks, and then you can start like doing different things with it. And this is the liquid representation of it, or one of them. I think there's actually a few, but this is the kind of most significant one so far. Mm-hmm. So interestingly, the way this works is oftentimes they don't, you know, like, because I don't want people to front run when these launch pads are going to be happening. They take a snapshot historically of like when people had their BNB here, and then they like, you know, allocate the launchpad rewards based off of that. So you can't just like think that, say, you know, Barachain is launching tomorrow and then go buy the YTs and have that would be represented. That's not apparently how it's going to work. But, you know, this will get you kind of that exposure to the Binance Launchpad, all of these stuff. What they're doing is they're selling all the rewards directly into BNB, and then they are distributing those rewards within 1 to 5 business days after the launch has happened. So I don't know. I think this is a pretty cool product. I didn't realize that this other platform had built on top of them. But Listus DAO is very cool. They also have a bunch of other vaults. They're kind of like a bunch of these like sneaky BNB native projects that seem to be popping up. I keep on seeing them on like Kernel, which is like the Kelp products, because you can go and restake. You can like take your staked BNB, which is then staked on the Binance Launchpad, and then go and restake it. So like the number of iterations of like how many layers of this you can get to is pretty incredible these days.
So it looks like Lista DAO is somehow acting as an intermediary or like a restaking platform for a lot of people. Like they have this gigantic pool of BNB, and they allow other protocols like Asterisk to, I don't know, mint their own proprietary asset against those underlying listed DAO BNB. Because I mean, so I'm reading this: earn holder airdrops and mega drop rewards in the form of more ASBNB. So it's compounding. We see that tokens will be converted to BNB by listed DAO, then converted to ASBNB by Asterisk. So it's listed DAO is the one selling, right? Selling and converting into more BNB, and then that is being converted into ASBNB by Asterisk. So that makes me think, like, is CLIS BNB is already by Lista. So Lista has their own version of this, and they also allow Asterisk to have a version of this. I don't know if this is like, if ASBNB is more or less a wrapped version of CLIS BNB or something else is going on. But regardless, it should have a similar actual real sort of yield from the staking plus the rewards. Then on top of that, we'll have Asterisk season 1 points and a future airdrop. So it's neat. And also look at this. 1 SISBNB equals 0. ASBNB. So I think it might literally just be a wrapped version of Lista's BNB.
Yeah, I think it is. And it's just like there's probably some fees being taken out by Asterisk or whatever they're called.
Yeah.
And that's part of the reason why it's happening. But yeah, I mean, it's interesting to see, you know, these derivatives coming to BNB. And it's also cool because like the Binance Launchpad is, you know, it's not an organic source of yield, but is a untapped source of yield that I think is like a very interesting one. Yeah. You know, I would say this would be a great delta neutral play. The problem is that like whenever there's one of these events, like shorting BNB gets really expensive because everyone wants to go and like do this. So if you go to Venus and you try to short it there, or if you do it on perps, you know, it gets very expensive. So I think that the 20% APR is like probably a pretty decent long-term APR, although there have been points when there's been big airdrops and it's gone much higher, like 40 and 50%. So anyway, could be an interesting new YT game. If anyone feels like they have a good sense of like how the Binance Launchpad works, there's probably some edge in it.
Yeah, it's kind of fun to watch these sort of like almost like a horse race compete. So ASUSDF was just higher than both of these two, and now EUSD is sort of in the lead again. Maybe people are watching this live and they're speculating. One of these top three, I mean, we can't really look at this SUSD one because it has 1 day left. It's effectively expired now. The other one is USR, and we've talked about this sort of ad nauseum, but I did want to go back and sort of do a check-in on one of my favorite assets, which is RLP. Because RLP, as you guys know, is the junior tranche mechanism for Resolve, and I've liked it, right? But of course, I also like JLP. And hey, if you compare JLP to Solana, it is actually doing really well. But if you compare JLP to, you know, dollars, JLP is kind of riding the struggle bus right now real bad. So this is RLP. RLP is a junior tranche. So it does absorb some of the like leg risk of the senior tranche, which is USR, sort of the more stable point of the two assets. But you know, yield is back up to like 17%, which has been pretty remarkable. I will say yesterday, I think the actual yield was like 2% because funding rate just sort of plummeted, and it's been bouncing around. So this is one asset that I sort of keep my eyes on just because I like the underlying mechanism of doing basis trades. And I think Resolve is committed to not just doing basis trades. I think they're also going to do treasury bills and things like that. And the neat part is, you know, RLP will get a leveraged exposure to that by virtue of it being a junior tranche. So it's something to keep an eye on. I won't say, you know, if we go over to yields, no, open up. If we go over to it now, the 7 day went from 17 yesterday to 12% today, which means like the 1 day is probably real bad, probably really is around that 2%. Euler is a good place to actually see the real-time yield. Do I have Euler? Yeah, of course I have Euler. I always have an Euler tab open. So if we go over here and then we go to strategies, no, let's do borrow. Let's do borrow, and then we'll go to the Resolve market. Well, we can really do, there's two markets that do Resolve. There's Resolve and Tulipa. Both of them are pretty good. But you can see they typically do real-time APR for RLP, which they're saying is 0%. So maybe today is not the best day, and yesterday it was 2%. But do keep an eye on it because it you know, it gets interesting every now and again. And of course, there's still the PTs for F-stake USR, which you can leverage, and you know, this, that, and the other thing. But I mean, my gosh, I know that I'm bouncing around like crazy. I didn't mention, but if you are on Sonic, if you are playing those Sonic games, there's 2 incentive programs going on for Euler. One, I think it's like $100,000, I forget, of Royal that they're incentivizing on this market, which is pretty big relative to the size of the market. And then 2, they also got a big incentives package in terms of wrapped S. So you're literally just getting S token, like the native token of the Sonic ecosystem. So here, for example, if you look at leveraging SCUSD, which is Rings USD, probably don't have enough time to get into how Rings USD works, but you know, ask me, I'll tell you. It's getting 4.7% yield, which is just, you know, a basic emissions yield paid out to you in the form of wrapped S when that ends in a month, right? So it's a month more of incentives provided by Sonic Labs directly. And then it also gives you 6.25 in Royal. I think it's 25% you can vest immediately, 75% you have to vest over 6 months. So there is that one caveat. Of course, you can, if you do vest immediately, you burn the other 75%. So that's kind of cool from like a tokenomics perspective, but kind of, you know, you have to take that into account when you're doing your math. So a lot of interesting plays out there for those of you interested in that. And there's points, right? So when you're on Sonic, most of these assets are getting 3, 4, 5, 6 points if you hold them, and then double that if you're doing stuff with them in DeFi. So I think SCUSD, for example, is getting like 12 points or something. I don't remember exactly how many points, but it's getting a lot. And, you know, we did a little bit of math that I will try to pull up. But in the meantime, have you thought about Sonic point systems at all since the pump?
Yeah, I think it's interesting. I mean, you know, they're giving out an amazing large amount of tokens, you know, and then they do have this like vesting period. I am, you know, there will be the airdrop of 75% that's vesting will be something that people can like sell on paint swap through an order book and stuff. So there will be some liquidity around it. But, you know, I think if you are someone who has like, you know, wants to have long-term exposure to Sonic, I think it makes a ton of sense. I think if you're purely just like yield farming it, it could be, you really just need to like adjust your calculations on like the APR and like realize you're going to be, you know, it's like 270 days where you're going to be getting 70% of it. And so like you need to probably discount that significantly, which is nice.
70 days. That's the write that down. I keep forgetting. That's a long time, but there is a caveat. So like, let's look at this, right? I'm assuming, and maybe your assumptions are different than mine. It'd be kind of cool to actually see what your assumptions are. I'm assuming the average addressable TVL for the airdrop is going to be around $750 million to $1 billion by the end of the season one, which I think is June something.
Yep.
Is that ballpark's around the same as we have?
Yeah, I think so.
Okay, cool. So that means we're looking like in this range, and at current price of Sonic, we can get really robust numbers here. So the average person with the average points multiplier will get an immediate ROI, unvested, no vesting, no lockup, between 2.4 to 1.8 on their notional. So if you're leveraged, you can, you know, if you're 5x leveraged, you can multiply this by 5. So, you know, 900 million, that would be 10% additional immediate ROI, not APR, ROI. If you did APR, it would be, you know, 5 times 4. So it would be 20% additional APR on that leveraged position, which is pretty good. And of course, if we're at 750, it gets even higher. Now, if you don't mind the 270 days of vesting, of course, the ROIs are much higher. But here's the thing, that vested S, as much as vesting is painful, is going to come in the form of an NFT. So I imagine there's going to be a lot of stuff happening. People are going to be selling these NFTs, swapping these NFTs, speculating on these NFTs and the value of them. And there's going to be a crazy discount, right? It's going to be kind of like a bond on S. You can purchase this NFT at a discount and then get these S over the course of 270 days, whatever you purchased it at. So that's going to be fascinating. It's not like you only get this ROI and then have to wait for everything else. You get this ROI, you get this immediate APR, and then you can decide what to do with the other 75% of your airdrop that is sort of stuck in this NFT, this composable NFT that you can sell, right? You can sell the rights to all the rest of your vested airdrop. So that it's, yeah, I mean, it's more than just this number and this number, but it's unclear what discount those NFTs will be trading at.
I just sent you a link in the chat that really kind of shows the way that this works. I mean, I guess it's just a graph going down to the right, but you can see here, no. So you can see here where it says distribution. So you get your 25% of your allocation immediately, 75% vests over 207 days. And then there is this like burn component. So like, again, as you just reiterating what you had said before, there's going to be this interesting dynamic where it could be deflationary for Sonic, or I guess it wouldn't be deflationary because there's like 200 million dollars or 200 million tokens going out in the wild, but not all of that 200 million will be actually distributed. I would imagine there's gonna be quite a few people that end up like claiming early, burning the rest of it, and then that part just completely get taken out of circulation. So
so I was wrong. It's not like you get the 25% and then you get 75% vesting. It's you choose to get the 25% and you burn the rest.
Let's see. No, I think you're right. So it's 25% immediately available. And then the remaining 75% vests in a position. A linear decay mechanism applies to the vested amount, allowing you to claim early at the cost of a penalty that burns a portion of your tokens. So you get the 25%.
Okay.
And then of that 75%, there is a burn mechanism. So I think you were right. Is that what you were saying?
Yeah. No, I was wrong. I was initially right, and then I was secondarily wrong. So that's actually good, because that scared me. Because I've been saying, cool. So you get 75%. That's good. Yeah. And then the 75%, there's a burn mechanism. So if you claim early, you burn the rest. I like that. It's the same thing as Euler.
Yeah. And there's this table here that tells you, like, if you're...
It's not the same as Euler.
If you burn within day 0 to 30, you're either giving up 100% to 89%. And then you can see, like, between the different days there, the amount on, like, a range that you're receiving rather than burning. So they kind of have it all broken down for you. Yeah.
Cool. Yeah. This is great. This is excellent. So, some of the yields over on Euler, go check them out. We should talk a little bit about, bear chain updates, I think, because fudding is not the right word. I like Goldilocks a lot. Nice team. Granted, be mindful, a newish team and newish mechanisms. I don't know if they forked anything. I should ask them. I keep saying this. But their market, which was RUSD, has a fixed APR of 30%. So this is one of the best fixed APRs you can get on stablecoins. They had no liquidity until recently, but now they have liquidity of 4.5 million, which is substantially more than they had previously. Let's see. So yesterday, you couldn't buy more than 5,000 without having a negative APR because you would impact the IY so much. So let's see how much you can buy and still get a decent fixed rate yield. So what I'm going to do is I'm going to click on this, and this should take me to, yep, perfect. And I'm going to grab the contract address of the OT. The OT is the same thing as the PT, right? So this is the fixed rate, fixed date yield mechanism. And I'm going to bring that over to Ooga Booga. Don't judge me. Ooga Booga, because Ooga Booga is effectively the ODOS. It's the DEX aggregator of Barachain. And so I am going to try to, and so what Goldilocks does is they have all of their OT-SY or OT principal token liquidity on Kodiak and then managed by, I think, Honey, I don't know. And so if you go to a DEX aggregator, there it is, you can simulate the swap here. And I would recommend doing this instead of buying from the Goldilocks front end, just because this is going to give you the best rate. So let's start with $1,000 and see what kind of price impact we have. So it looks like we get a 5.4% ROI. That's great. Almost zero price impact. That's phenomenal. It's a really good yield. That's roughly 28%, 29%. Because it's a 70-day expiry. Let's do 10,000. Yesterday, yeah. So they say they've added liquidity, but at $10,000, which is not too big for a lot of people, you would have a negative return. You'd have an 8.94% price impact and a negative return on your principal. So, hey, maybe there's $4 million of liquidity, but it's on the wrong side. It must be for selling the OT.
I think that it's for the YTs, actually. I think they said that. I saw them put something out that they have just like put a ton of liquidity in for the YT side, but there's still weak liquidity on the OT side. I don't really understand still how that works, where you're the Pendle version of it, where you like break up the asset and there's like the YT is a certain value and the P value, makes a ton of sense to me. Having the liquidity broken up where the liquidity is in a different venue and they're LPing between RUSD and then the OT of it and the YT of it, and that's separated out, that still kind of boggles my mind a little bit. Can you explain to me how that works?
Yeah, well, I mean, so you can always redeem. You can redeem RUSD. You should be able to redeem. No, you can't? Oh, okay. Well, that is weird. Theoretically, you should be able to redeem like one OT and one YT for an RUSD. Now, the fact that you can't is kind of concerning, because how else would you redeem the YT? I mean, I guess you don't have to redeem the YT, but you don't redeem YT at all. You also don't redeem OT, which is kind of weird. This must be like swap, redeem ownership of tokens and burn yield tokens. Yes, that's what I want to do. Redeem ownership tokens and burn yield tokens. Estimated tokens burned. So, okay, so this is effective. This is such a wonky mechanism. So this is a redemption mechanism. My understanding is you have to have one. You would probably have to have one YT and one RUSD-OT, which is the same exact mechanism in Pendle, in order to receive one RUSD. That's my understanding of this front end, right? So you have to burn one YT, plus you have to have one RUSD-OT, just like in Pendle, or you have to have one of the PTs, one of the YTs in order to get the principal back. And so because of this like arbitrageable mechanism on the open market, the YT plus the PT should always equal the principal, just because if it doesn't, there's an arbitrage opportunity. I think that's sort of my takeaway. So
got it, that makes sense. So like Pendle like LPs the two together, and so when people are buying and selling YT versus PT, they're effectively like in one pool, trading the two assets against one another. In this one, they're separate pools that are being traded on Kodiak, but the reason that they will kind of move in tandem with one another is because even though they're separated pools, if there is a dislocation in the market, someone can always step in and arbitrage it back. Okay, I get that. It seems confusing to do it that way, but I get how it works. Okay.
Yeah, right. So that's my current understanding. And also there should be Goldilocks points and then Goldilocks token in the future. We'll see if Goldilocks takes off. I do think like they're really struggling with this RUSD. I was thinking about this as well, which is, okay, so RUSD is priced pretty well at 30% IY, but there's no capacity to purchase the OT token. So if it was me and I knew people might be interested in this, and I also had infinite funds, someone might, right, take RUSD, go mint a ton of the YT and OT RUSD, and then throw it in like a 2% fee tier on Kodiak at like an IY at an implied yield of what would end up being like 28%, 27%, whatever, it doesn't really matter. And then just eat that, right? So they're getting tons of fees to, effectively sell their OT back into PT. I mean, I could just see that working out, but.
Well, like, this is the thing that I would say. So like, people have been dunking a little bit on Goldilocks because this stuff has been wonky. But what it reminds me of is like a couple years ago with Steven trying to explain Pendle to me and me dunking on him and being like, this doesn't work, this is silly, this is, whatever. And I was wrong. I was dead wrong. You know what I mean? And so like, the fact is that Goldilocks is doing something innovative where they're having both the YT and the PT be assets that are composable. And that's awesome, right? Like, it is really cool that like they have all this like, new functionality that's coming for the derivatives of this stuff. And it kind of makes me excited on it. And I hope that they figure it out. And I hope that like we get to a place where, YTs and PTs do have LPs and Steven can run these crazy high fee tier, like LPs where people can be leveraging YTs on money markets, not just PTs, so I think it's cool. Like, and I think hopefully we give them a little time, they figure this stuff out, they improve liquidity, they, onboard new kind of like use cases and composability. And I think it could be really useful, but we'll see how that works out.
Yeah. I mean, I think that's fair. A quick update on the BGT stuff. I just want to do a quick comparison and explanation of why iBGT is getting 161% and actually why Stride BGT is getting 226%. Now, you understand this better than me. Can you give me an explanation there? First, what is BGT and why is there a difference between the staked versions on Infrared versus Stride?
Okay, so in the Berachain system, it's a 3-token system. I think 2 of the tokens are pretty easy to understand, and one of them is a little different. The first one is like Bera, which is just like the governance token. You can use it in the gas token. It's the gas token. See, the gas token. It's kind of also the governance token. But anyway, yeah, that's where it gets complicated. So you can stake your Bera in like a traditional-esque kind of like proof of stake system, although this is a proof of liquidity system, and that's where the BGT comes in. It's also the gas token for the ecosystem. Then you have Honey, which is like the native stablecoin that's backed by USDC. And then you have BGT, and that's really where we get into like the meat and potatoes of POL. BGT can only be earned by providing liquidity in the system of Berachain. Now in the future, there will be a ton of different like whitelisted, incentivized places where you can earn BGT. Right now, it's only in 5 places that you can do that. And those are on BEX, which is the native DEX for Berachain, and the pools are a BGC pool, a Honey Berachain pool, Bera ETH, Honey PayPal, and Honey USDC. And these are the places where you can be earning, BGT. BGT is a soul-bound token, so you can't actually trade it, and it's just kind of accumulating in your wallet. You can then go and delegate it to a validator who then increases their voting power within the system. And in the future, we will have basically this like hopeful flywheel where people want to bribe for that like emissions and that voting power, and then they're paying your validator to do that. For right now, we haven't seen the full launch of POL yet, so that kind of bribing system isn't happening. But what is happening is we have liquid staked versions of this or liquid locked versions of this. So right now you can go to Infrared and you can deposit your LP tokens from BEX, or you can go to Stride and do the same thing, and then you're earning the same BGT, the main advantage being that they are giving you a liquid representation of it that you can then go and sell if you want. If you're just earning this regularly, you can always do this unstake thing that Steven has here, and you can always convert 1 BGT to 1 Bera token. You can do that if you're just doing it like natively without Infrared or Stride, and you can also always do it with Infrared and Stride. So now that gets us to what Steven's question was. I know there's a lot of background. You can go and stake your BGT, and this is essentially, saying your goal, like no matter what, it's basically like in the validator system, and it's, being delegated for different voting power. But if you stake it is when you're going to be earning those fees. So if you go and stake your BGT, you're getting a portion of the fees that are being generated by the BGT voting power. And essentially what that means is it's the fees that are being collected on BEX. And so you have the swap fees, whether it be Honey or Bear or ETH or BTC or whatever, are all being sold into Honey and then being distributed to people that are staking it. Now, the reason there's such a big difference between Infrared and Stride here is because there's a wildly different amount that's being staked. So if you go and look at Infrared, there's $6 million being staked, and that's paying out an APR of 161%, which is fantastic, and that's already super high because there's tons of people that are not participating in that system. If you go to Stride, there's even higher APR, 226%, and that's because there's such a small amount being staked here. They're really trying to incentivize people to go and LP it, so they're trying to get people to go to STBGT wrapped Bera, and so there's actually more liquidity there, which means that there is less people who are participating in the staked version, and that's why that APR is higher. So it's kind of like ratios within their system. The ratio of BGT that's being staked in the Stride system is less than the ratio of BGT that's being staked in the Infrared system, and they have their own inherent TVLs and the amount that they're generating and all that stuff. You can't really compare that because really what we care about is like the amount of BGT that's there and earning those Honey rewards. Is that a decent explanation? It's quite a mouthful, but Bearchain is also quite complicated. So.
It is, except so you said that Bera might actually be the governance token too. Am I understanding BGT wrong? I thought BGT was the only way you could participate in governance, but is that just like it's the only way to participate in emission directing? Am I understanding?
I think so. No, I think that's right. I think that it's the only way to do emission directing. The reason I said that was, and I could be wrong here, and maybe please yell at me if I'm wrong about this in like the comments of this podcast, but I think that like for governance decisions that are not about directing emissions, but are more about like the overall governance of Bearchain as an ecosystem, as a layer one. I think that Bera tokens do have voting power in that.
Because there is Bera, so there has to be...
There is stake Bera, yeah. And that's earning like 7% or something like that. So I think with that portion, like there is voting power, but for the emissions part, for the actual proof of liquidity part, I think it's only BGT. So if we're wrong about that, please correct us in the chat or in the comments. It's always nice to be corrected. So
that's right. Yeah. That's right. Exactly right. Let's jump over to Solana real quick. Last couple minutes, just to show off, I think, two things. One is RateX got some new markets. RateX is a pendle-like. Don't look at this one. It expires in 0 days, so it's you can't participate in it. The ones that just launched were the Frags. So Frag is Fragable. I don't know. I forget the name of this thing. But Fragmetric, I was totally wrong there. Fragmetric, they are an LRT for Solana. They're doing some interesting things. They're similar to Easy Sol as far as I understand. Like they're using that new, I forget what the ABS, what are the ABSs for Solana called? Do you remember?
I don't.
They're like SVCs, I think, or something like that. Though they're like using that one that takes the MEV or whatever, and they're auto compounding it in, so you get a higher intrinsic yield there, but you're also getting like 4x Fragmetric points. But if you're with FragSol, you're also getting Jito rewards. So there's all sorts of stuff happening. So you can get a 19% fixed rate fixed date on FragSol. You can get 22% fixed rate fixed date on Jito. But if you LP these things, this is full range liquidity, so there's no concentration. You don't really have to manage that. You can get 32% on the Jito or 26% on the FragSol plus points. Now, I'm not sure if the points are on the notional or on only the portion of it, which is like the FragSol and not the PT part. That would be something you have to confirm, but they're also getting Jito incentives, which is really cool. I don't know, are they even estimating the Jito incentives? No, they're not even estimating the Jito incentives. So that's additional to this 26% APR, which is pretty cool. So that, I know Sol is way down in the dumps, but if anyone is still interested in like getting a yield on Sol, FragSol I think is one of the best for non-leveraged Sol yields. If you were going to leverage Sol, Easy Sol seems to be the standout obvious choice here. So Easy Sol has like an intrinsic yield of 11.5% APY, which is pretty nuts. That's because of that. I think it's SVC. Guys, correct me if I'm wrong. It may be it's CVS. Who knows? It's something, right? It's their version of ABS. That's giving a boosted yield on top of the staking yield, and so it ends up being something like 11.5 APY. Now, if you add the supply APY, so it's also getting Renzo reward from REZ, it ends up being something like around 12.5 to 13%. You can then borrow Jito Sol, which has an intrinsic yield of like 8%, and leverage that at, I want to say, a 90% LTV, which is 10x leverage. So long story short, it's a 13 to 8, so it's a 5% arbitrage and 10x leverage, around 50% APR for max leverage easy SOL. And this is using an NAV oracle, which means it's not beholden to market rate fluctuations or DPEGs, or at least market rate fluctuations and DPEGs will not liquidate you, which is pretty slick. So I think that is probably the best leveraged Solana yield. And I think that RateX probably has the best unleveraged Solana yield. So that's what I'll say. Is there anything else that we should look at?
Yeah, there is one last thing. I just sent you a couple links in the chat. One bit of hopium we have out there. It's always nice to end on a little bit of hopium. Is that the Babylon Foundation has announced the registration of airdrops. So if you just go to the link above this one that I sent.
A baby address. Okay, go ahead. I think this is the right one, right? Airdrop. This one?
There's two. There's that one, and then there's one above it. Basically, the one above it's just like the announcement. But
you don't know me.
Basically, the Babylon Foundation has been formed. We are now seeing that there is the criteria for the airdrop. Basically, it's people that participated in phase 1 and staked up into the closure of cap 2. They have a certain block height there. So like if you have been farming Babylon since that, it seems like you're going to be pushed into phase 2 of this rather than phase 1. So like, something to think about there. But typically when we see these kind of announcements and when we see, eligibility checkers, the airdrop is not far away.
Right.
I've heard a little bit of rumors on the rumor mill that we're looking about a month. I think that might be roughly the time of when this happens. That being said, we've seen a bunch of other airdrops recently, like Kernel, that was supposed to happen now and has gotten pushed back because of market conditions and Bybit and all sorts of stuff. So who knows? Who knows how that plays out? But I think Babylon could be a pretty big airdrop. They still have, over $5 billion of TVL and BTC. So yeah, I think this is an exciting one, and definitely make sure to register. Don't miss out on this one. You do, if you were just natively staking, you do need to go connect like your different BTC addresses to CosmWasm address, and kind of like essentially do that piece of it. If you were farming this with Lombard or with EtherFi or whatever, my understanding is you do not need to do that, and that connection between your wallets will happen later on. Although please, keep an eye on this. And if you do need to do some registration, do it and don't miss out. There's always a surprising number of people, whether it be Hyperliquid or all these other airdrops, who forget to do the registration, and it's not fun. So yeah, that's my final thought, Stephen.
One last thing to say is it seems like they have a pretty robust VPN blocker. So you may need to explore some, maybe do a little bit of traveling or find some robust VPN options, I would say. And there are some out there. I'm not going to say them here because then they'll get blocked, but you can always ask around. That's it for today. Okay, one last thing. I have a FFX position open. Probably a bad idea because I'm down 25% on my 3x position. But the fascinating thing here is that I have only paid 39 cents in funding in the 2 weeks I've had this position open. 39 cents. Now, why is that? It's because you never pay funding on your positions on FFX unless the FFX token goes below $0.998. It's a stablecoin, FFX USD. And when that happens, then instead of using the flash loan mechanism to open up the leverage position, it literally just uses a regular flash loan to open up an actual leveraged Aave position, and you pay like a round of Aave interest rate. So at most you pay an Aave interest rate on your stablecoin that you're leveraging using, but at normal conditions you pay nothing at all. So that's been kind of cool. Again, I've only paid 39 cents in the 2 weeks I've had this open. A shout out to FFX, even though I am down bad. So thank you guys for watching, and have a wonderful rest of your